Okay, all right, good morning. Hi, my name is Joanna Nelson, and I'm with the New Mexico Economic Development Department. Thank you so much for joining us today. We're really excited to get this information out to you about the New Mexico LEDA Recovery Grant Program. And before we get started, I wanted to cover a little bit of logistics with you. We are broadcasting this information out to our social media channels, and so that's the Economic Development Department YouTube channel as well as Facebook. So you can find the broadcast either places, and it will be recorded after this session is concluded. And so you'll be able to go back and watch it again, or if you have to jump off, no problem at all. And please interact, ask us questions. You can put those questions right there in the comments box, and we're going to do our best to address those. And if we don't, we've got staff on hand, and NMFA's team is on board too to record those questions and get you some answers back. So again, thank you so much for joining us. We're really glad you were able to tune in. And if we want to go to the next slide, there we go. I wanted to give a brief overview of the Economic Development Department. Our Cabinet Secretary is Alicia J. Keys, and our Deputy Secretary is John Clark. And we are really thrilled and excited to present this information to you today and be working so closely in collaboration with New Mexico Finance Authority and all of the amazing folks that have partnered on this program and put in so much time and energy to get this out to folks as we're dealing still with the impacts of COVID-19. So I want to turn it over to Marquita Russell, who is the CEO of New Mexico Finance Authority, and she's going to walk us through an overview of the New Mexico LEDA Recovery Grant Program, and then we'll address your questions after the session. Marquita?
Great. Thank you very much, Joanna, and thank you all for joining us today. I am really happy to be here to talk about the New Mexico LEDA Recovery Grants. It's a brand new program. The state just passed this law in the regular session back in February, and so this is cutting edge information. For those of you that don't know the New Mexico Finance Authority, we're a government instrumentality that was created back in 1992. We primarily finance local government projects, so your streets, roads, water systems, fire trucks. Many of those projects have been funded through some of our low-cost loan programs offered at the New Mexico Finance Authority. But we do have other programs that we operate. We've been active in offering several different recovery and stimulus programs, including the New Mexico Small Business Recovery Loan Fund. And we are very pleased to be working again with the Economic Development Department in operating the LEDA recovery grants. So let's just start off with what is LEDA. The Local Economic Development Act, referred to as LEDA, was enacted as a result of a change to the state's constitution back in 1994. The voters approved a sort of a carve-out to the state's anti-donation clause in the state constitution, which allows public funds to be used now for private benefit in limited instances and when specifically authorized by a state or local government. LEDA is the law that implements that constitutional change and guides local governments in the determination of whether public funds may be used for private benefit. As I mentioned earlier, the 2021 legislature passed and Governor Lujan Grisham signed into law House Bill 11, which made a temporary change to the LEDA law, which allows for the Finance Authority and EDD to operate this $200 million state-funded grant program to provide rent, lease, and mortgage assistance to businesses that experienced hardship during the pandemic and are now getting back on their feet and reinstating jobs that were lost during that pandemic. So let's go through just a kind of high-level overview, and then we'll dig down a little bit. So first, and most importantly, how are the awards determined? Awards of up to $100,000 will be made based upon the number of full-time equivalent employees, which we'll call FTEs, that were added on or after April 1st of 2021. And award amounts are based on sort of a sliding scale. They're based on the percentage of loss of revenue that for one or more quarters between 2019 and 2020 that was experienced by the business, and the average wages to be paid by for the new FTEs that are going to be added. Job creation, because this is part of this LEDA Act, job creation is a requirement. So if you're not going to be in a position to hire employees or to add more hours to your existing employees, this isn't a program that's going to work for you. Job creation is a requirement. The funds may be used to reimburse businesses for rent, lease, or mortgage payments that they've made for the building occupied by the business during the time period of the grant. The amount of funds that we disperse to the business, even if you qualify for a lot, the amount of funds dispersed can't exceed the amount of rent, lease, or mortgage payments made during that period. And I will go through an example later on. And for some companies out there that have a mortgage on their business, but they've separated it and they've provided for an affiliated company to own the real estate, and then they lease it to their operating company, we can use this program to pay an affiliated landlord in that particular instance, but only if the affiliated landlord has a mortgage on the business, on the building. Funds are going to be dispersed in phases. Shortly after closing, 25% of the grant will be dispersed to your business's bank account. That bank account must be at a federally insured financial institution. Thereafter, all of the disbursements will be post-performance, meaning that you'll have to have proven that you met certain targets before we're able to disperse additional funds. You may submit your request for funding quarterly, because this is going to be based on job creation, and we're going to need to look at your unemployment wage report that you filed with the Department of Workforce Solutions. We'll look at that and determine the actual number of new FTEs that you added since that last period and from the beginning of the application time period. We're expecting to open this application next Tuesday, May 11th at noon. And close it 5 weeks later on Tuesday, June 15th, again at noon. And I'm going to just caveat again, we're expecting to open this. We are implementing some cutting edge technology that helps the state of New Mexico protect its investment. These recovery and stimulus programs that have been operating across the nation have really been a fervent ground for fraudsters. So in order to protect the state's investment, we want to make certain that the people that are accessing the funds are indeed New Mexico businesses, that there is not someone pretending to be you accessing either grant or loan funds intended for you. So that technology, that sort of fraud mitigation, we're working on it now. And as I said, we expect to open this next Tuesday at noon. But stay tuned. We'll send out an actual e-blast at the point at which that application is open. But I would note that applications will need to be prioritized and awards will be made after the application period closes. So whether you submit your application on Thursday, May 13th or Sunday, June 13th, it won't make a difference, because we will not be prioritizing applications until the point at which the application period closes. So we encourage you to take your time, be thorough, because you'll spend less time. If errors are made, it's just going to delay the processing of the application. So take your time, but give yourself enough time to complete it. It's a tricky balance. We're going to be giving priority, as the statute requires, to those businesses that experience the greatest revenue decline on a percentage basis between 2019 and 2020. So, eligibility. The law requires that you qualify as a recovery entity, which means that you're a business that operates in New Mexico. You may be organized as a corporation, including a nonprofit corporation, a limited liability company, a partnership, joint venture, syndicate, association, or a sole proprietor. So basically any form of organized business. You have to have at least one employee, but fewer than 75 employees, and that's a combination of full-time and part-time per business location. So if you're a restaurant that has 3 different locations, each of those locations can qualify separately. You'll need to have demonstrated that you experienced a decline in business revenues between 1 or more comparable quarters in 2019 and 2020. And your business must be current on all state and local tax obligations, and you'll be required to certify that you do not anticipate filing bankruptcy or ceasing business operations. The implicit eligibility is that you'll had to have been in business by October 1st of 2019, because again, we have to look at a decline in 1 or more quarters of revenue. So you'll had to have been in business by October 1st. And your FTEs must be employees, and those will be folks that you pay unemployment taxes for whom you file wage reports with the New Mexico Department of Workforce Solutions. Contract employees do not qualify for this program. An FTE is an employee that regularly works at least 40 hours per week. The hours of employees that work less than 40 hours, that regularly work less than 40 hours, are prorated and added together. So I'm going to, Maria's accounting, it's an example I'll use throughout today's presentation. Maria owns an accounting firm. She employs 9 people. At the time of application, 3 of her employees are full-time who work on average 40 hours per week, and the other 6 have been moved down to part-time employees who work on average of 20 hours a week. So those 3 full-time who work an average of 40 will be considered each one full-time employee. We'll prorate the rest, so 20 hours per week of a 40-hour week. Each of those part-time individuals is then a half FTE or a 0.5 FTE. So when you add that all up, Maria's staff of 9 employees is equal to 6 FTEs. So that's how we get to that calculation. The other phrase you're going to need to learn for this program is baseline jobs. That's the number of FTEs that are reported to the Department of Workforce Solutions for the quarter ended either December 31st, 2020 or March 31st, 2021. We would encourage you to use the lower number because that any job added after that baseline is then considered a net new FTE. And again, 25% of the grant will be funded at closing, and at that point, from that point thereon, the grant is post-performance, meaning that the amount that you're eligible to be dispersed is based on the actual net increase in FTEs over the baseline. So as I said, choose the lower of the baselines. It's our recommendation between either December 30th, 2020 and March 31st, 2021. There must be at least one employee or a 0.5 FTE. And then at the end of each quarter, when you ask for your reimbursement, we will look at the documentation you supplied to determine the number of FTEs that you now have. We'll subtract the baseline. That's how we'll get the net new. Then we'll take away from that any amount that we dispersed to date. And you can't, as part of the statute, you cannot exceed 25% of the grant award. Okay, the grant can't exceed $100,000 per business location, and the base grant for each projected new FTE is based on the percentage of revenue decline experienced by the business. So there are several levels of decline. If you are less than 20%, your base grant per FTE is $5,000. If you are at least 20% but less than 40%, it's $7,000 per FTE. At least 40% but less than 60%, it's $9,000. At least 60% but less than 80%, you have an $11,000 base grant. And if your revenue decline was 80% or more, then you get $13,000 grant per FTE. Now, additionally, we're going to look at the proposed wages of each of those FTEs, and we'll average them. If the average wage of the new FTE is more than $13 per hour, then there'll be a $1,000 bonus per FTE. And if the average wage is $17 per hour, there'll be an additional $1,000. So it'll be a total of $2,000 per FTE if the average wage exceeds $17 per hour. So again, the grant amount is going to be the combination of those things. So you'll take into consideration the base grant amount plus the wage bonus, add those two together, and multiply by the number of new FTEs you anticipate hiring. Let's go back to our example of Maria's accounting. Maria had to reduce her staff, as I mentioned earlier, during 2020 because many of their clients had to temporarily shut down or reduce their operations. So Maria experienced in 2020 a 50% revenue decline between 19 and 20. With her business now reopening, she's able to bring back several of those folks, and she's actually going to hire an additional position. She anticipates hiring the addition from 2 part-time employees. So they'll each work 20 hours a week. That's 1 FTE. And her 6 accountants will have their hours increased ultimately from 20 hours per week back to the 40-hour work week. So she kept her employees before, but she reduced their time. She's now going to bring them back to full time. So over the grant period, she will be adding the 2 file clerks part-time. That's 1 FTE at $15 per hour, and the 6 accountants will go from 20 back to 40. That's 3 FTE at $35 per hour. So her average is going to be 4 FTEs added. Her 50% revenue decline gets her a base wage of at least $9,000 per FTE, and her average wage for those 8 part-time employees but 4 FTEs exceeds the $17 per hour. I think it's closer to $30, but it exceeds the $17 per hour, resulting in $2,000 wage bonus. So her actual grant will be $44,000. That's made up of the $9,000 base wage. I'll go back a page to remind us. So she's a 50% revenue decline. So she's at $9,000. She gets $2,000 for the wage bonus because it exceeds the $17 an hour average wage. And then there's 4 FTEs. So $9,000 plus $2,000, or $11,000 times 4 employees gets you to $44,000. So following on this example, at closing, which we expect to be in July since the application period ends in the middle of June, and then we'll prioritize thereafter, NMFA is going to disperse to Maria at her bank account 25% of the grant. So 25% is $11,000. Maria immediately starts hiring people back. She's going to take back most of her employees to full-time by the end of the first quarter. So in October, which is the reporting period that follows the July through September quarter, in October, she's going to submit documentation to us. She's going to report a total of 10 employees to Department of Workforce Solutions, and she's going to provide us with a certification and documentation that shows the number of those 10, the number that those 10 employees equal in terms of full-time equivalents. So based on the example we just used, she has 8.5 FTEs at the end of that quarter. Her baseline was 6 FTEs, so now she's got 2.5 new FTE for that quarter. So her grant award is $11,000 per FTE. She has a net of 2.5 new FTE, so she's able, technically her award would be $27,500. But let's remember, she already received $11,000 at closing, so we have to back that out. And no, not one of her dispersals can exceed more than 25% of the grant in any time period. So each quarter, she's limited to no more than $11,000, which is the 25%. So in this instance, she's able to draw $11,000 based solely on the new FTEs that she's added. She's given us records to show that she made $25,000 of mortgage payments, and that's enough to meet the first draw condition of $11,000 and the second of $11,000. So she's received $22,000 and she's put out $25,000. So she's therefore eligible to receive the entire amount. I know that's a little complicated, and we're happy to walk through some of those questions at the end if this example hasn't illustrated enough. But there are a number of factors involved in how the grant is calculated, and then ultimately how we disperse the grant over time. Businesses will apply online at our website, nmfinance.com. You are, unlike some of the other programs that we had offered in 2020, our new application system requires that you register. So you'll have to take some time to create a portal, a username and a password within our portal. As I said, we expect to open next Tuesday and close on June 15th. We will be offering at least $150 million of the grant funds as part of this application cycle, but depending on demand, an additional 30 may be added to that cycle. At least 2/3 of that $150 million or $100 million will be awards will be made to businesses located in what we call the urban areas, and those are the cities of Albuquerque, Las Cruces, Rio Rancho, and Santa Fe, as well as those areas that immediately adjoin them, so about a 10-mile radius. That's the urban set aside. We will set aside $50 million in awards for businesses located in other areas, so that's that rural set aside. But again, $30 million depending on the proration of the applications. We may be adding money to each of those pots or just one of them, again, depending on demand. Applicants may submit one application per business location. You may not submit more than one application for one location. So if you have a duplicate application, it will not get accepted into the system. The system will need to differentiate between each of the locations, and you will submit those applications separately. Staff at the Finance Authority will be reviewing those applications as they come in. We will notify you via email that's sent from the application portal of any questions we might have. There may be clarifications that are needed, corrections that are needed. We are not able to correct your application. Our system doesn't allow us to do that. We can highlight the error and bring it to your attention and you can correct it, but we can't make the correction directly. But if we need you to change something, we will be emailing you from the application system. You need to then log back into the system and make the changes yourself, and then we'll review them and it'll go back and forth. So again, take your time, make sure it's correct, because you don't want to keep going back into the system to make the corrections. But we require that the documentation be correct and that the information match, and you have 5 weeks in which to get that done. So we anticipate that that won't be a problem, but please know that we'll have to contact you via email. We won't be calling you and asking for information over the phone to correct an application, but we might call you to say, please check your email. Applications will be prioritized again once the application closes. It'll be based upon the percentage decline of revenue from 2019 over 2020. And we will be comparing you against those businesses in your geographic area. So if you're a rural business, that is to say you're using that rural set aside, you'll be compared against others in that rural set aside. If you're in an urban set aside, you'll be compared against those in the urban set aside. So we will have two different prioritizations going on for those different set asides. I mentioned earlier, you're going to have to create a username and a password. You will be using this same username and password for the entire grant application. So from the point at which you apply, if you are awarded a grant, you'll sign it through the application portal, and then ultimately you'll be coming back to that quarterly to submit your documentation and request funding. So save your password someplace safe, but you'll be needing to use that should you be awarded funds, that's the system that you're going to use until all the dollars are dispersed. You can complete your application at one time. You can do it over a number of days. You simply have to save the application and return to it. And all the documentation requires that you submit it in electronic format. And as I said earlier, you'll be notified if there's something incorrect or incomplete, and you are given an opportunity to correct it. We will not simply decline the application or reject the application because it's wrong. You will have opportunities to correct it. Things that you will need in order to complete an application. First and foremost, most important here, is a projection of the new FTE that is going to be added by your business. You'll need to have some detail because we'll need to know the number of FTE at each wage level. And so, please be prepared to give us some detail on the jobs that you're going to create. We note that the purpose of the program is to bring you back to pre-pandemic levels. So you cannot be awarded for more FTEs than you had in total before the pandemic. So if you had 10 FTEs before the pandemic and you are currently down to 5, you can't get a grant for another 10 FTE because that would take you to a total of 15 FTE. So we want to get you back to pre-pandemic levels, get you back and evened out. So in that particular instance, if you had 10 FTE pre-pandemic and you anticipate creating another 10, we can only take the additional 5 FTE for part of this grant. And we will be asking for documentation on that. You'll either need to submit your 2019 or 2020 business tax returns. We will not accept extensions. This is to make sure you are an actual business that's operating. So we'll need to see if you're a sole proprietor. We'll need to see your Schedule C. We're going to be asking for evidence of decline, which can be one of 3 things. If you're a business that has to file a CRS report with Department of Taxation and Revenue because you are subject to gross receipts tax, then you may submit, if you're a quarterly filer, 1 report for 2019 and that same quarter in 2020. If you're a monthly filer of CRS reports, then pick a quarter and submit the 3 months that make up that quarter in 2019 and those same months in 2020. If you don't want to go through that and you have your 2019 and your 2020 tax returns done, you may also just submit your second tax return and we can compare the revenues from those documents. Lastly, if you're not a business that files CRS reports, if you're a nonprofit, for instance, or you're otherwise exempt from GRT, and you do not have your tax returns for 2020, or maybe you had an incomplete 2019 year because you started partway through the year and you wouldn't show that business decline, there is a way for us to accept bank statements and business billing statements. So that is an option in those limited instances in which you don't file CRS reports and you don't have 2 full years of tax returns. So that option exists. We wouldn't recommend it. It's a lot more paperwork, but we want to make certain that all businesses are given an opportunity to apply. A couple other things we'll need to see. We'll need to see the copy of the rental, lease, or mortgage agreement that you're going to be seeking reimbursement for. We will only be able to reimburse you for the term of that agreement. So for instance, a rent agreement is typically shorter in time than a lease. Maybe a rent agreement is 2 or 3 months and a lease agreement maybe for a year. If your grant amount exceeds the amount due on that remaining portion of the rent agreement, you may wish to get it extended before you apply because you are going to be limited to the amount that you have due. We're not going to pay you for grants that for a building that you won't be in anymore. You will need to see a copy of the form that you supplied to the Department of Workforce Solutions. That's that Form 903A. We want to see it for the quarter ended December 31st or March December 31st of 2020 or March 31st of 2021, we're giving you the option to choose the lower of them to evidence your baseline jobs. We'll also need to see that same report, the DWS Form 903A, for any quarter between March of 2019 and September of 2020, and that's to evidence the highest number of employees that you had. We will also be asking for some supplemental information to support the Form 903A. We'll give you the form in which to do that, but we want to make certain that we know the hours for the employees that you're reporting so that we can figure out the number of FTEs that were created. Lastly, we're going to need to see the front and back of your driver's license or other government issued photo ID. We're going to be running that through our fraud database just to make certain someone isn't pretending to be you. Okay, there's a lot there. We would encourage you to visit our website, nmfinance.com, for frequently asked questions. We'll put in their application tips and tutorials should there be any additional questions that you have. We update those frequently asked questions, honestly, fairly frequently. As we see several applicants or clients asking the same questions, we put that in there so that your questions, our answers to your questions, can benefit your neighbors. Please sign up for our recovery and stimulus program mailing list so that we can send you any updates that might be necessary for the program. It'll send, if you're on that list, you'll get a notification that the application is open. And then lastly, if you have questions, we have a email set up just for this program. It's LEDA@nmfa.net, LEDA@nmfa.net, or you can call one of our program folks are able to answer your questions, 505-992-9696. And I would note that we are currently operating the Small Business Recovery Loan Fund as well, and it is the same staff that will be working on both of these programs. So please be patient if you get a voicemail. Again, we encourage you to use the email system so that we can get back to you as quickly as possible. And with that, Joanna, I think we are ready for questions.
Okay, great. Thank you, Marquita. And I put up, again, you can see it 2 times on your screen, the email and the phone number for questions. And I'm going to just start going through these questions that have been coming in. Some of them are repeats. So I'll try to do my best to ask the ones that weren't covered. But we did get a couple of questions about eligible entities, specifically sole proprietors. Are they eligible?
Yes, as long as you have one FTE, and that FTE is somebody that you report to the Department of Workforce Solutions, you pay unemployment wages, taxes on them, and you report their wages, then yes, they are an employee. And sole proprietors are eligible.
Okay, and there was a question too about, right, does that, if a sole proprietor doesn't have employees, but are they able to count themselves as an employee?
Well, we have to create a baseline. So if you are reporting yourself to the Department of Workforce Solutions, then yes, it really gets down to how you're paying yourself, whether you're paying yourself as an owner or as an employee. But if you are reporting your wages to the Department of Workforce Solutions as being paid from your business, then that's an FTE or an equivalent therein, and that would qualify. And so you'll have to have at least one, because we need to have a baseline before the application opens.
Okay.
Or actually by at least March 31st of 2021. Okay.
Can a business that has a LEDA grant, and I think they're referring to our standard Local Economic Development Act projects, qualify for a new award?
My understanding is yes, that this is different and separate from the regular LEDA program that EDD operates. So your application will be considered separate on its own.
Okay. And let's see. So here's a question that kind of gets at the use of funds, and I'm seeing this presented in a few different ways of how the funding can be used. But this is talking about if the business owns their building outright, but needs building repairs, can you use the funds of these expenses? So this is
no, the answer is no. They'll need to have a mortgage in place in order for us to use this program. It's intended to help businesses that have fixed costs and give them a leg up so that they can start hiring employees again. So no, unfortunately, if you own your business building outright, you are not eligible for the program.
Okay, thank you. Yeah, there's a few questions about different ways that they could use the funding.
And I'd note that because this is LEDA money, which has very limited uses, again, this is a constitutional carve-out, and equipment doesn't count, so this can't be used for equipment, it can't be used for working capital, it can only be used to reimburse for rent assistance or mortgage assistance in this, if you have a loan against your building rather than paying a landlord.
Okay, thank you.
We see here, I see here one that came up as part of our CARES grant as well, which is the grant money taxable? And it is. It is subject to income tax. Loan dollars are not, but grant dollars are. So we will be sending you and sending on documentation for the grant money you received.
Okay, great. Thank you. And let's see, a couple of questions about, people owning the building, again, going back to uses of the funding.
And I would note that while it's not grant dollars, the Small Business Recovery Loan Fund is a place that you can go to, again, also accessed through nmfinance.com, for loan dollars that can help with those repairs. And it's incredibly low cost money. It's 1.625%. You can qualify for up to 3 months of your operating expenses. And the first year is interest free. And for the next 2 years is interest only. And then you have 7 years to repay the loan. So while this grant program doesn't work for that, the loan program does. So I would encourage you to look at that should you have needs outside of rent, lease, or mortgage assistance. Please look at that loan program. It's a nice complement to the LEDA recovery grant.
Okay, thank you. That's great information. And then another person is asking, they're kind of asking for clarification on this program versus the EIDL from the Small Business Administration. And so just a good point to raise that this is a state program versus the SBA. The exciting programs that are coming through from them are from the federal government.
Yes, and in addition, the EIDL is a loan program, and this is an outright grant program. So you're not expected to repay these dollars at all. So at the point at which you receive the award and you meet the various qualifications to get dispersals from it, that's outright grant dollars. There's no expectation for repayment.
Okay, and then we had a question asking about volunteers. Again, this is going back to the eligibility of.
Yeah, we saw that a lot with another program that we operated. Unfortunately, volunteers, contract employees aren't eligible. We'll need to see that you reported unemployment taxes to the Department of Workforce Solutions, reported their wages, paid those taxes on Form 903A. So if you didn't do that, then they don't qualify.
Thank you. And this question has come up in a few different ways, but again, it's getting back to the fact that a building is owned outright and they don't have a mortgage. And so this person is saying, can you clarify the details on whether rent is an allowable expense if the landlord does not have a mortgage? Are there circumstances where the rent could still be an allowable expense?
No, unfortunately, if you're affiliated landlord, again, you own an operating company that leases from another company that you own, a real estate holding company, and the real estate holding company does not have a mortgage on the property any longer, then the rent that's paid to that affiliated landlord cannot be reimbursed. So we need to be helping businesses with their existing fixed expenses to third parties that that they simply can't control. So bankers and landlords are what we're trying to help them stay current with.
Thank you. Candace is asking, are the revenue declines specifically determined by comparing quarters, or is there the potential to look at an annual decline?
You can look at an annual decline. Yes, it's one or more quarters, but it just has to be a similar time period.
Okay. And then just again, clarification on if businesses received any type of a grant from the state previously, are they eligible for this program?
Yes.
And does it affect their eligibility if they received SBA funding from the SBA?
No, we don't take into consideration any other funding sources. So this application will be judged solely on your revenue losses and your FTEs that you anticipate bringing back or hiring. So they're entirely separate.
Okay. I am seeing that we have covered some of these questions, most of the questions, and then a lot of them are very specific, so we could follow up with them. Here's one from Misty that this comes up a lot in our work, and in fact, in the regular LEDA program, and it's about, I guess she's affiliated with a business incubator. Would she be able to apply? Well, she's saying she doesn't hire employees. However, we do promote economic development and support startup businesses. So I think we just know the answer to that one.
Right. We appreciate the work they're doing because that's important. That's important for small business growth, but unfortunately, it doesn't meet the terms of this grant. It would meet the terms of our loan program. Again, Small Business Recovery Loan Fund, that's another state-funded program. So this $200 million grant program created by the state, funded by the state, and then we have a $500 million loan program created by the state, funded by the state. So there's $700 million of state assistance being made available for small businesses to help see your way out of this economic decline. So hopefully one of those two programs or both. I mean, there's really no reason you couldn't layer both programs if you needed that assistance, but take a look at both of them.
That's good to know. Thank you. And again, are nonprofits eligible?
They are absolutely eligible. Yes.
Okay. Good to know. And there's a question about, can you use your home mortgage if you work out of a home?
It is for a business location. So we are not allowed to fund home mortgages.
Okay. And then again, here's a question about related to SBA funding, which you just answered. Okay. I am not seeing any more questions. There's questions about how to apply, which you have. I can put up the website up again.
You'll come in through nmfinance.com. There will be, as I said, there'll be some tutorials on the system, the how-tos, as we get closer to that date. We already have the Small Business Recovery Loan Program up and operating. And so, you know, if you've gone into that system and created that password, you'll have a really good sense of what's going to be needed. It's user-friendly, highly secure. So, you know, it's a safe place for your information to be held.
Great, thank you so much. And I got a question about, is the recording available afterward? And I want to remind everyone that this will be recorded on YouTube and Facebook, so you'll be able to come and access it after this session. And we will send a link out to everyone that registered. So hopefully you got that notification to register and submit your email, and we'll send that out. And again, it'll be available on New Mexico Finance Authority's website too. And we'll also send out an FAQ and some other relevant information as well. So Marquita, is there anything that you want to close with?
I don't, other than to say that this is a really complex program. And so, you know, we encourage you to send emails to the LEDA at nmfa.net so we can send your question to the right sort of subject matter expert. It's important that we get your question to the person who knows the answer best. If you call that 992-9696, we'll eventually get you there, but the most direct route for these more technical questions that are really just about your particular business situation, we would encourage you to email those to us so that we can get that answer farmed out as quickly as possible and back to you.
Great, thank you so much. And in this follow-up email that we'll send, we'll also put some contacts for EDD as well, if we can be of any assistance in the meantime too. So, okay, Marquita, well, I'm going to wrap up.
Great. Thank you all very much for attending. We appreciate your interest in this program, and we certainly hope that it is able to help you weather these next several months.
Great. And thank you, Marquita. Thanks for all you and your team's work on this, as well as the larger group that was collaborating on this. Thank you so much.
Great. All right. Everyone have a nice day. Bye.
Bye. Take care.